Thanks very much. Good morning to you all. Um, let's start this session. So it's our first knowledge session from the emerging area, energy emerging areas. We've reached out to other sectors, emerging areas, energy sectors, and then we'll structure it more as we develop and then evolve our practice here. But one of the things we want to do is to really look at, frontier technology, new solutions that we should be, working on. There are a lot of things that we need to work on, but then something that we may want to take time and then spend some, time together, working on this, how we approach so that eventually we'll be able to create more pipeline and then a meaningful impact. But we can't just look at simple projects or the pipeline project that the government or the utility, our clients, come up with. There are a lot of things that we should work in upstream, but with the mind that we have a meaningful impact through our investments downstream. So this is in this spirit of a new operating model. One of the new initiative, especially Cindy's leading this knowledge session, and then we try to see how we can make it more inclusive and meaningful to the our energy ecosystem or the emerging area multi-sector community within the bank. So today is one of the first sessions, and then we got a very excellent the speaker and the presenter, and then I would ask Cindy to lead the session. I have to apologize. I might have to leave within half an hour at 9 o'clock, but then I will ask Cindy to run it through the whole session today. So thanks very much. Over to you.
Thank you very much, Keju. And good morning, good evening, good afternoon, everyone. And welcome to this first of our knowledge series events under the Emerging Areas Energy Sector. We indeed have a brilliant first speaker in this series, Ralph Chami. He is one of our experts under the Emerging Areas Team Expert Pool, and we are really glad that he is able to join us all the way from North America. Thank you, Ralph. So Ralph Chami has over 32 years of experience as a financial economist with 25 years at the International Monetary Fund, or IMF. He has also served as a consultant for the World Bank and for the private sector, and he is the co-founder and CEO of Blue Green Future and Rebalance Earth. And he holds visiting professor positions at Williams College and the University of Victoria. You can see his profile, his full profile in the meeting invite. He is indeed a brilliant expert. So I'll give the floor to Ralph, and we will have Q&A sessions at the end of his presentation. Thank you so much. Over to you, Ralph.
Thank you so much, Cindy. Thank you for the invite, and thank you all for showing up. Unfortunately, I cannot see you because when I put this in the presentation mode, I can only see my slides. So what I would like to, in the time that I have, is do a quick tour through what the emerging area, if you like, or financial and economic area called the blue natural capital in general. In particular, I will focus on blue natural capital. This started as a hobby for me when I was at the IMF. My expertise is in really financial markets, banking, risk management, remittances, and as a hobby, I went to study the blue whales in the Sea of Cortez, and there I discovered what the blue whales can do, aside from being majestic, is that they're actually great allies in the fight against climate change. And I tried as a financial economist to value their services. So this, what started as a hobby became a sort of an obsession. And pretty soon, people were knocking on my door saying, can you value seagrass, salt marsh, mangroves, all that stuff. And so I retired from the IMF about a year ago and dedicated the rest of my working days to look at how we build markets around nature. And when you talk about, when you kind of get into this topic, where's the point of entry for this topic? And really it is you can start with the risks that humanity is facing, because this is where the value of nature, of a living nature, really comes in. So let me make the case and then show you how we can build markets around nature and where we are right now in this endeavor. So we all know now that we are facing not only the climate risk, but also the risk of losing nature itself and its biodiversity. We also know that these two risks are due to human activity for the most part. Now, those that grew up in the climate change kind of silo, if you go back to the Kyoto Protocol, you go back to Paris Agreement of 2015, it was really about how we do risk, mitigation is through reduction in emissions and in pulling carbon dioxide from the atmosphere. Those that we're focusing on the risk to nature itself. We're really concerned more about how we protect nature, how we restore nature, how do we regrow nature, how do we rejuvenate nature. The problem we are facing right now is that these two risks are feeding off of each other, and we are in the 11th hour, and we do not have the luxury of tackling one, then tackling the other. So the problem that's facing humanity right now is how do we tackle both at the same time? So I thought before I give you the solution is how did we get here? Well, I'm a professional economist, like some of you here on this call. And I was a professor also for the first part of my life. And I practiced this one, which is really, we never really thought of nature at all when we were talking about general equilibrium theory or financial markets. We kind of acted as if the economy was outside of nature. We thought that nature was inert or infinite. And in fact, this idea goes back to Descartes, it goes back to the Cartesian system, it goes back to the Cartesian, paradigm, it goes back to the Age of Enlightenment, where you can, if you go back and look at the writings, you'll see that the presumption really that nature was either inert or nature had infinite commodities. So as a result, why do you worry about nature? You really think about the economy, so you can extract from nature with impunity, you can pollute it with impunity. And as I drew it for you here in two circles, you can, if you truly believe in this, you start to believe that the economy circle can grow without worrying about whether the nature circle itself grows or not. But it turns out that this kind of presumption, baseless presumption, is really unsustainable. So we got really growth, but we got really growth at a very high cost. And that is the cost of climate change that is feeding into, sort of the ecosystem depletion and biodiversity decline, which is the natural capital risk. And these two risks are feeding off of each other. Of course, we would say, well, what is the correct paradigm? Well, the correct paradigm, is we always know, is that everything that we do is inside of nature. We are humans, we are part of nature, and we come from nature, and to nature we return. Our society, our economy is all nested inside of nature. So visually, this is the way I usually think of it. And as a result, once you see it this way, you kind of realize right away that if this nature circle were to grow, we grow. And if it were to shrink, we are going to feel its impact on our economy and our society. Okay, so this is what I want to take you to, is the new economic paradigm that has nature at the core. We call it nature positive and people positive economy. So I'm going to build that case for it. All right, but if we know that nature is the solution to fighting climate change and we need to protect nature, how do we get there? Well, if you started from the climate side, you would hear a lot about net zero pledges. And the idea there is, for most companies, you hear, well, we need to stop our emissions, we need to, replace hydrocarbons with solar or water or whatever it is, new technology. It's really, they're focused on emissions. And they believe by reduction or doing away with emissions, you're helping to reduce the impact on climate change. Okay, If you grew up in sort of the nature side and the biodiversity side, it's really the mitigation there is to protect and restore nature. And by definition, if you were to protect nature, you would be reducing the risk to nature and biodiversity. But what the scientists are telling us is that nature is a great carbon removal. Okay, and by how much? Well, if we then would they refer to it as a nature-based solution. Nature, when you protect and you restore nature, nature can help us reduce climate change by at least 38%. And the way I have a paper which I haven't published yet. It's called, the title of it is On the Problem of the Tap and the Tub. Because I think there's a great confusion out there in the policy circle about what is it that we're supposed to be doing. If you think of emissions, the way I think about it is emissions is kind of a flow issue. So how much are you emitting into the atmosphere? But when you talk about pulling carbon from the atmosphere, right? So nature, when we plant trees, when we plant seagrass, salt marshes, expand salt marshes, mangroves, kelp, and so forth, you are pulling carbon from the atmosphere. So really, you're pulling from the stock of carbon in the atmosphere. So really, there are two problems here. There's a problem of flow. When we are, building anything, we're emitting carbon dioxide and other kind of gases into the atmosphere. And when we are planting and regrowing forests and so forth, we are actually pulling carbon, not from the emissions, but from the stock of carbon in the atmosphere. So we really have two problems. We have a problem of, I call it the tap, meaning the tap is still dripping, which is the flow, carbon dioxide, into a tub. And tub, that's the atmosphere. And that tub is full of carbon dioxide. So what does this mean? It means if we stop all emissions today, suppose magically we push a button and all emissions stop as of now, we still haven't solved the problem because there's already the legacy carbon dioxide that is sitting up in the atmosphere. That's the tub. And the tub is full of carbon dioxide. So we need to drain the tub. So therefore we have two problems. We have two objectives and we need two instruments. We need to reduce emissions to zero and we need to pull carbon dioxide from the atmosphere. Okay, so but what this is telling you is that if we were to protect nature and restore nature, so we reduce the risk to nature, but then nature boomerangs back and help us to fight climate change, reducing climate change risk by at least 38%. So we have the solution in front of us. Okay, so wanted to show you where the conversation is going right now. So when I started working on this and I was sitting at the IMF back in 2015, it was all about climate. No one was talking about nature. The scientists were, but policy circles, all about climate and climate risk. But now there's a understanding within the policy circle is that there are two really risks. And so the new risk on the block is really the nature side, the exposure of our businesses and our economies to the nature side, not only to the climate side. And the latest study I just saw yesterday, I summarized it for you here. Over 40% of global equity value is at risk unless we really take decarbonization effort seriously. And these, I cited for you a number of studies here by ECB and other central banks were basically showing you the exposure of companies, be it financial or otherwise, to the nature risk itself, not only just to the climate risk. Okay, so what's on because of this realization of the role of the risk that nature is playing, affecting the balance sheets of banks and non-financial institutions, central banks now and regulators are at least in the EU. I'm quite familiar with what they're doing. They're revising their macro and financial frameworks to reflect the impact on nature. So they're going back, if you're thinking of inflation targeting and forward-looking monetary policy, you will see that they're tweaking their models to try to introduce, endogenize the impact of nature, impact of our own activity on nature. They call it double materiality, and how nature is really affecting the bottom line and therefore affecting the macro environment. At the same time, the latest thing happening in Europe, you probably are aware of the EU Nature Restoration Law, which was passed by the EU Parliament on February 27, and about 3 weeks ago, about less than a month ago, all the countries ratified it. So nature restoration law is basically saying to every company in the EU, saying, don't talk to me about your impact, your carbon offsets. Tell me about your impact on nature itself in conducting your business. They've given them, usually they would give you 6 years when such a law would be passed. They're giving them 2 years. So in 2025, all companies in the EU have to report to their regulators what is their net impact on nature. Even if you are a company in the EU and you're importing material, intermediate products from the United States, you have to call your exporter from the United States and say, when you're sending me this widget, are you harming nature? You are responsible to report that to the regulator. Okay. The UK biodiversity law goes in the same vein for the UK companies, saying, tell us, first of all, it's going to be, not really, it's qualitative for the first year, but very quickly it's going to be quantitative. What is your impact, net impact on nature, which goes beyond just carbon sequestration? This is from the sort of the regulation side, and it's coming. By the way, the SEC is about to announce its own version of something similar to this. Markets are already, the market itself is coming up with its own metrics for how companies should be behaving vis-a-vis nature and the climate. You can think of TNFD, ICDCM, and there are many efforts in that vein, which are market solutions or market attempt at a solution to the problem of climate risk and risk to nature itself. I have seen pricing models now for insurance companies, pension funds, and others, where they're looking at what is they're trying to quantify what is the impact of loss of nature and its biodiversity, aside from the climate, on the balance sheet, okay, on their obligations. And of course, you've heard about California, what happened in the real estate in some parts of California, where the insurance industry basically just said, you know what, we can no longer insure you. And they just walked out. Imagine if you have a house in that vicinity, where now all the big insurance companies have walked out of that area. What do you think is going to happen to the value of your home? What's going to happen to the value of any business that is related to real estate in California, in that area where the insurance companies have basically said, listen, it's not even risky, it's uncertain. We don't really know. Our models cannot handle the impact of the change in the climate and nature on homes and on businesses. So they basically walked out. Okay. Now, so far, what I've said is that we are facing climate risk, we are facing nature risk, and policymakers and the markets are getting sensitized very quickly to their impacts on their balance sheet. But the story that I want to tell you is not a story of, beware the risk. You already know that, but that in every risk, there's an opportunity. So the story that I want to tell from here on till the end of this seminar is how nature, or investing in nature, is actually a great opportunity for countries and for businesses. Okay, so where do we start? Well, I already told you that the solution to the climate change is investing in the protection and restoration of nature, and nature will help us by at least 40% in the fight against climate change. But when you say that, people say, what is it then? You're talking about planting trees? No. Planting trees is even if we were to plant all of the 1/5 of the planet, which is land, because 4/5 of the planet is water. Even if you plant every inch of the 1/5 with trees, it will not solve the climate problem. The real lungs of the planet are in the ocean. The lungs of the planet are in the ocean. That's what the science has been telling us. So in the ocean, the phytoplankton, these are microscopic organisms that float. You see that green part here in the ocean. They do really something incredible. They absorb carbon dioxide and they return oxygen to the atmosphere. How much carbon dioxide they absorb? They absorb 33 gigatons of carbon dioxide per year. That is equivalent to the work of 4 Amazon forests per year. Closer to shore, we have seagrass, salt marsh, mangroves, kelp, seaweed, and and other kind of aquatic bodies that absorb tremendous amount of carbon and fix it in the sediments. But they do a lot more than that. If you have healthy seagrass, for example, seagrass not only sequesters carbon, but when you have healthy seagrass, you have healthy fish. When you have healthy seagrass, they're great defense against flooding. When you have healthy seagrass, you have healthy corals. So these bodies, seagrass, mangroves, salt marshes, provide a lot of valuable ecosystem services that are valuable to our economy and our society. I wanted to tell you also
What's the
that the
most
open
efficient
ocean.
way of
I'm sorry. Oh, okay. Thought I heard someone say something. Um, so the open ocean is a great carbon sequester. And this is important because people don't pay attention to the open ocean. I call it the orphan. It belongs to no one and therefore belongs to everyone. The IPCC reports that at least that open ocean has grabbed over 500 gigatons of carbon dioxide from the atmosphere. Imagine in the last 200 years since we have data. But it turns out it's not only Florida that captures carbon, but also fauna. And people don't pay attention because usually you think it's trees or maybe flora in the ocean. But this is work. This is paper by a gentleman from Yale, Oswald Schmidt, and his colleagues. They published a paper last year in Nature Journal showing that also animals help to sequester carbon in either on their body or in the flora itself. And they published the paper in Nature, and you can see here the table which tells you the amounts that they help to capture in terms of carbon dioxide. Just want to give you two examples. This is paper that we published in 2019, where we learned from the scientists that the great whales capture carbon on their body. How much? Equivalent to 1,500 trees. And that's on the body of one whale on average. And these whales, great whales, are very heavy. So when they die, they sink to the bottom. And when they sink to the bottom, that carbon is sequestered forever. But the more important part is that those great whales have a huge appetite. They feed on krill, and krill feeds on phytoplankton. So the whale eats krill, the krill eats phytoplankton, zooplankton, phytoplankton. But because those whales have a huge appetite, they eat a lot, and excuse my expression, they poop a lot, and their poop has in it iron, nitrogen, and phosphorus, and these are the ingredients that are necessary for the survival of phytoplankton. So what does that mean? That means the whale that is feeding on the krill eats a lot, poops a lot. The phytoplankton becomes much more active. When it's more active, there's more phytoplankton, which means there's more krill. That means there's more food for the whale, and you get this virtuous cycle. More importantly for our purposes is that means the whales are helping to capture carbon not only on their body, but also through their fertilization of phyto. When they fertilize phyto grabs more carbon from the atmosphere. So in our 2019 paper, which was published then, when I was still at the IMF, basically we're saying, look, the work of the whales in terms of carbon sequestration could be equivalent to thousands of trees, one whale. This is work of Fabio Berzaghi and his colleagues, which published in Nature Journal, appeared the same year, 2019, showing that even in the forests, these are forest elephants. They call them forest engineers. Turns out that these elephants, like the whales, through the way they eat, they poop, they walk around, and their proclivity for certain species of vegetation, they enhance carbon in the forest between 7 and 14%. Depending on the concentration of elephant per square kilometer. All I want you to get out of here is that science is telling us that nature is incredibly valuable in the climate fight. Flora, trees on land, but more importantly, the oceans, could be seagrass, salt marsh, mangroves, kelp forest, seaweed, all of this, they capture tremendous amount of carbon dioxide, but also fauna. Could be, the elephants, could be wildebeest, could be the hippos. There's a lot of work now showing that not only the elephants, but mega herbivores also help to sequester carbon in the forest. So it's really the biodiversity, because when you see a picture like this Or the picture here, you talk about animal interacting with vegetation, and that's a story of biodiversity. Same thing here. So it's really a story of biodiversity is incredibly valuable in the fight against climate change. So the science is telling us that nature is incredibly valuable. Can we value it in dollars and cents? Because we are not scientists. And what we want to know is, okay, so how does that affect me? I was sitting at the IMF. I remember when the Paris Agreement was signed in 2015, and my team and I got, we're looking at the price of carbon at the time. It was hovering around zero, and you start to see the price of carbon eking up, reaching almost over $120 per ton. So, and of course, if you look at the futures market, at least for the compliance market, you can see that the price of carbon continues to go up and up and up. Why? Because we have made commitments to fight climate change when, at the Paris Agreement. It was at the government level, and now companies have made that commitment. And they all made commitments at the time was 2050 or 2040, but they made the commitment and they continued to pollute. So what happened was, because we didn't do anything really materially to reduce our dependencies and to reduce emissions or to even grab carbon from the atmosphere, the climate calamity has become even more urgent. So rather than, the decision, well, we shouldn't reach 1.5 by 2050, it becomes we shouldn't reach 1.5 by 2040, and still the world keeps talking about it and doing nothing about it. And so now, if you look at the IPCC reports, they talk about we really need to do something in the next 7 years by 20, or 6 years by 2030, if we want to avoid breaching even the 2 degrees. So all of that is doing is creating urgency in the market for carbon, causing the price for carbon and biodiversity to echo up. That's the demand side of the equation. So if we know the price of carbon, and we know that nature sequesters carbon, we can go back into what I showed you before and start to value the carbon sequestration services of nature. These are snapshots of work that I was doing with my colleagues. We were asked to look at the Florida mangroves and the Everglades and calculate what is the value of carbon sequestration per square kilometer for the mangroves. And it was at least at the time $1.6 million. This is work we had done for DEFRA back 2019, 2020. The UK had lost about 90% of its salt marshes. And the idea here, what if we were to bring them back to where they used to be? So just like we do in macro, you have the steady state or the potential, and you're somewhere here, and you're trying to see what, you build the profile of going back to where you were before. The value per square kilometer of bringing back the salt marsh is at least 1.5 million. This is just in carbon sequestration. Okay, this is work that we are doing currently with the famous Carlos Duarte, who was the #1 marine ecologist. He is an expert on seagrass, mangroves, corals, and so forth. So what we learned from Carlos is that seagrass grows exponentially for 50 years. Imagine. Seagrass is like a tree on its side. It grows laterally and grows vertically. Mangroves are trees, they just grow vertically. Seagrass grows this way, and it's colonal. The moment you protect it, it just starts growing at a very fast pace. In fact, exponentially. So it grows exponentially for 50 years and at a constant rate forever, as long as you have land. So the question we were asked at the time by UNEP, what is the value of seagrass? And so this is work with Carlos. We came back saying, well, it's at least $1 trillion just in carbon sequestration alone. Just imagine, this is worldwide. But this is without showing that when you have healthy seagrass, you have a delta on fish stocks. And the Australians have already proved that. They have tremendous, excellent data showing how seagrass impacts fish stocks. So one could calculate what is the dollar amount, the additionality from having healthy seagrass on fish stocks. And also when you have healthy seagrass, you are staving off flooding, and you can calculate the value of that service. And if you were to add them all together, seagrass is really gold. We're talking about trillions in terms of seagrass. Corals on net do not capture carbon because they do capture, but as they form their exoskeleton, they emit carbon dioxide, and the scientists have agreed that on net they're carbon neutral, but of course the corals are the soul of the ocean, and there's where a lot of the fish live and all the other animal organisms and so forth. And so this is work of a colleague of ours in the IPCC showing that there's the coral services, ecosystem services, at least $36 billion a year. Okay, this is work that we have published in the last couple of years. We went back and said, okay, we know how much carbon whales capture on average per year on a flow basis as the population grows. We used to have 5 million whales, and when whaling was at its peak, we were down to about less than 1 million, and now we're hovering about 1.5 million. What if we're to rebuild, allow nature to come back? What would be the value of a single whale over her lifetime, just in terms of carbon sequestration, in terms of impact on fish stocks, in terms of impact on whale tourism? And the number was about 3 million. It's actually more than 3 million per whale. This is work on the elephants. We did the same. We asked the question, what is the carbon sequestration value of the service just of a single elephant over her lifetime? And it was $2.6 million per elephant. So science tells us nature is valuable. We can try to take that knowledge and science and use, we started with carbon, not because we like carbon, it's because carbon, we look at actually carbon as the short game, but there's a price for carbon. And using the science and understanding the flow of carbon sequestration by whatever it is, whether be it animal or flora, we can calculate the value of the carbon sequestration service of these bodies over their lifetime. So we have the science, we have the valuation. You would think the case has been made for nature. Science tells us nature is valuable. We can value its services, and you can see the numbers are huge. So you'd think money must be coming into nature and the protection, restoration of nature hand over fist. Nothing of the sort. Here, this is Paulson Institute, from there, one of their reports showing that in order to protect nature, let's say we need about $1 trillion in terms of per year to protect nature worldwide. The amount that's coming from philanthropy is woefully small, as you can see down here. And the government's contribution to the protection of nature is even smaller. And so we have a gap of about $700 billion a year. So where's that going to come from? Philanthropy can go so far. People like to proselytize, ask you to pay more to protect nature, but people are voting with their pockets saying, this is how much I care. Governments are distracted with other things, so the money is not going to come from the governments. So if we are to protect nature, and it's not a luxury, if we don't protect nature, we lose the battle of protection of nature, we lose, our own existence would be at stake. So the only thing left is, well, there are trillions of dollars sitting in financial markets and the private businesses. Can we make the case to the private sector that nature is investable? This is what I want to talk about. And it turns out, yes, we can. So the whole story from now on is, I'm not going to appeal to philanthropy. I'm not going to appeal to altruism. I'm going to make a value proposition to the businesses that they benefit from investing in rebuilding nature stocks. So this is a slide from I interact quite a bit with asset managers, with hedge funds, pensions, all this stuff. And this is typically what they tell me. When I tell them, look, nature is investable, why aren't you guys coming in? They say, well, okay, Ralph, yeah, but how do I invest and not get burnt? I mean, it's a new area I know nothing about. So how do I safely invest? How do we even scale up? We hear of small projects, in Mozambique or in Pakistan or in Indonesia or maybe in Malaysia or Philippines. But are these things scalable? And the answer to all of this is that yes, they are scalable, and you can invest, and it's no more risky than any other investment, which I'll show you. Okay, so yeah, as I said, nature is investable. But when we say that, the question is, we have a supply. Every market has a supply side and has a demand side. So when you talk to the asset managers, and I talk to them quite extensively, they say it's really about data quality. So they tell you, where do we get data about what's happening in the Bahamas? You tell us the Bahamas is sitting on 30% of the global seagrass. Who's going to provide us that data? Okay. Well, the answer is now we have digital MRV, we have pattern recognition, we have AI. It's all about not production of data, and they don't want the markets doesn't really care that the data is complete, but what the markets care about is that data is quality data. And so my answer to them is that yes, in the past that may have been the case, but now we have digital MRVs, we have AI, we have satellites, we have sensors. There's so much that we can bring from the technology side that would help us to ascertain the quality of that data. Okay, indigenous population and local communities, sovereigns, have a huge incentive to develop their nature markets and nature in terms of biodiversity, carbon, and because this would be assets on their balance sheet. Okay, and so what's happening from the supply side, there's a tremendous interest in how do I take my nature to the market without being fleeced? How do I do this? So the supply side, it's really, so when I work on the supply, I work on both sides of the market. On the supply side, we really stress that whatever data is being produced better be the best data. Doesn't have to be complete. Markets can price incomplete information, but refuses to price knowingly incorrect information. From the demand side, already I was telling you that the regulators are coming. So the regulation now is pushing the demand side, but also it's good business. Consumers, investors, employees are asking companies, what is your impact on nature? Okay, there are a lot of very active shareholders that are basically asking their companies or refusing to invest in companies that are that are knowingly damaging nature. So there's pull from both sides. The demand side, the regulation now is catching up, saying what is your impact on nature? Employees are asking, investors are asking, consumers are asking companies, where do you fit in this story? Okay, so there's convergence on the importance of investing in nature, or at least contributing to the restoration of nature. And here I just want to tell you that the nature market is developing. We already now with the UK biodiversity law, the EU nature restoration law, they're leapfrogging over carbon. They're asking companies to showcase what is the impact on biodiversity. In fact, they're asking them what is your impact on nature itself, which would include carbon and biodiversity, social and cultural. Okay. And the finance, we in the finance field, we are actually now developed a new technique, which we refer to as a science-based finance, which I'll explain in a bit. What does that mean? So we are working now, the old idea of, I'm a scientist, I'm a finance guy, I'm an econ guy. We were living in these silos. They're really breaking down, and we're working across fields, working together in order to tackle this issue. Because if you want to come into this space, you really need to work across science and anthropology and you need and legal minds in order to be able to meaningfully build markets around nature. Okay, so let me just zero in on what is needed to scale up nature markets. Okay, so on the left-hand side, think of the demand for ecosystem services. What do I mean demand? Well, it could be Microsoft, could be Google, could be financial companies that are interested in investing in nature. They want to, could be for reputational purposes. It could be because the regulators are coming saying, what is your impact on nature? And so they want to invest in nature, could be asset managers on the left-hand side. The supply side of the ecosystem services is mostly sitting in the global south, for the most part, in SIDS, in small islands. We call them small islands, but they're actually large ocean countries. I mean, the Bahamas and others, which have a tremendous, huge ocean presence. So the landmass may be small. So on the supply of ecosystem services, it could be seagrass, it could be mangroves, it could be elephants, if you like. So in order to bring, so how does this market work? The guys on the left are going to pay money to the guys on the right in order to sequester carbon on their behalf. Just staying with the carbon for a minute. But in order for them to do that, we have to solve a number of issues. One, can you tell me, remember, we are trying to bring investment into nature. So the first question usually you get is, okay, Raul, you want me to invest in seagrass, Bahamas, all right? Or mangroves in Indonesia. Well, how much carbon are these bodies going to sequester next year and the year after? Because you want my money today. So if you want my money today, you have to tell me something about the future. You don't tell me wait till this carbon is is there, because then why I won't give you my money today. I'll wait till tomorrow and go buy it myself. So can you project what will be the quantities and the cash flows? And the answer is yes. This is a paper with Carlos Duarte on seagrass, and you can see how it grows exponentially, okay, for the first 50 years, then it concentrates forever. Using that, we can build nonlinear projection models, which is on the right-hand side. And the stuff in green is the confidence bounds around the models. So these are not linear models. These are stochastic, nonlinear projection models based on the science. We refer to that as science-based finance. Now, if you tell me, well, show me an application, here it is. So in 2021, Carlos Duarte and the group called Beneath the Waves, this is the paper on the right-hand side. What they did something really ingenious. They put cameras, 365 cameras on tiger sharks, and they let them loose in seagrass. Why? Because tiger sharks feed on sea turtles, and sea turtles feed on seagrass. So why would you want to do something crazy like that? Because they were able to map the sea floor of the Bahamas in no time. Those tiger sharks travel about 80 miles a day. They don't come up for air and they don't take breaks. So in no time, Bahamas found out that they're sitting on 30% of the global seagrass. Just imagine. That paper was published in Nature Communications, and it went viral. So I was brought in to do the valuation part. So Bahamas is sitting on 93,000 square kilometers of seagrass, and they potentially can go up by another 40,000. Imagine. So I was asked, what is the value of that additionality? And the value is at least $170 billion. And that's the graph that you see up here. Just imagine what that would mean to the Bahamas, a country that to GDP is 50%, has all kinds of issues, is subject to nature shocks and so forth, that if they were able to sell the carbon, if they were able to to commit and do the 40,000 plant restoration, they could acquire at least 170 billion just in carbon alone, aside from the impact on fish and on flood control and all that stuff. Okay, so that's one. Two, typical question is, well, if you want to sell the carbon of the seagrass, first question that the investor is going to ask you, these guys on the left, what is the provenance? Okay, so the question for the Bahamas was, who owns those carbon credits? Is it private? Is it the government? Is it clear? So what the government did right away, they published a legislation which basically says, I took copies of it for you. Basically, it basically says, look, we don't really care who owns the seagrass, but any blue or green, be it trees on land or mangroves on land, or you're talking about seagrass, the carbon belongs to the government. No ifs, no buts. Meaning, if you want to invest in the carbon of the Bahamas, you will deal directly with the government of the Bahamas. So there's no ambiguity there. And this is very important in the market for nature, because I have been asked to help out in a number of places where the ownership is not clear. And if the ownership is not clear, then if you want to bring in investors, they're not going to come in. If there's any ambiguity as who owns the asset, more importantly, who owns the carbon credits, in this case, of these assets. But the interesting part is, if you can show that you own the asset and you have a value of that asset, then if you own it, it enters your balance sheet. And this is really the most important part of this, because once it enters the balance sheet, suppose of the government of the Bahamas, it's going to change the net worth of the government. It's going to change its debt dynamics. It's going to change its sovereign ratings. It's going to change its economic outlook, its growth projections, everything changes. So when the science tells you nature is valuable, you're able to do market valuation, not environmental economic valuation, market valuation, as I'm describing it to you, and you can show that you own it. That codification in the law allows you to take something called nature, converts it into an asset, converts it to a capital that enters the balance sheet, be it of the indigenous people if they own it, or be it of the government themselves, or the province, whoever it is that can show ownership. It changes their net worth, it changes everything. This is very important here, okay? In some cases, we can, rather than look at nature as an asset, this is a project that we're doing with the Maori people in the South Pacific, in New Zealand, in Cook Islands, in Tonga, in Tahiti. There, the Maori king, along with other Polynesian leaders, they met on March 27, and they conferred legal personhood on the whale. That means the whale doesn't become a person, but the whale now has legal rights, the right of free living, pursuit of happiness, getting food, and so forth. That changes, along with the valuation, the market valuation of their services is a game changer. And if I have time, I'll come back to it, show you what does it really mean. Okay. The third thing that you face that the demand side is going to ask you when you want to build market for nature in any of the countries in Asia, it's going to say, okay, so you want me to invest in the carbon of the Bahamas. By the way, I am working with the government of the Bahamas in order to take their seagrass, carbon of their seagrass to the markets. So suppose I'm Microsoft and I want to invest in that carbon, but I'm sitting in Seattle and the government is planting seagrass on my behalf in the Bahamas. So there's an asymmetry of information. How do I know? How can I verify? So really what's going on is this. How do you build trust here? The buyer, again, let's say it's Microsoft or Google, or they've made commitments to go carbon zero, carbon negative, carbon neutral, and they're paying money for the services of flora or fauna. Now remember, they are not buying the underlying. When we work with indigenous local communities or governments in SIDS and the Global South, we always say, don't ever sell your asset. You're selling the services of your mangroves or your whale. There's no market for the whale. But if mangrove, seagrass, salt marsh, you never sell the underlying. But you're paying for the services, in this case, if it's carbon, and that money has to go to look after, let's say this is seagrass, so the money has to go here to look after the seagrass in perpetuity. Some of it may go to the government if the government owns part of the seagrass, but it has to also go to the local communities. So what Microsoft wants to know is who is planting, who is looking after what. And when I started this work back in 2017, we did not have that technology, but now we have it in spades. We have sensors, we have satellites, that can monitor 24/7. That can actually track all of these things. And to ensure that the money is going to the communities, we use blockchain, we can use tokens and so forth to make sure that the money is really going to where it's supposed to go. And finally, the other thing that the investors are going to ask is, okay, so the government made a commitment to plant seagrass. Yes. Okay, how do we know that the succeeding government will also keep their word? And because if I'm Microsoft and I'm purchasing carbon for the next, next 15, 20 years, or if I'm a pension fund, okay? And I have long-term liabilities and I'm looking at nature as a long-term asset. So I need to do maturity matching. So I'm buying ex ante exposure into the next 20, 30 years. How do I know that the subsequent governments will keep their word? How do I ensure commitment? This is something we asked the government of the Bahamas to make sure that they, and the idea there is you create, it's almost like a sovereign wealth fund or a retention fund or intergenerational fund. That basically, yes, the asset belongs to the government, but that the money that comes in from the sale of the carbon in this case goes into a fund, and that fund is invested such that that fund is solvent in perpetuity. And the governance of that fund is what matters here. So the asset belongs to the government. It sits on the balance sheet, changes net worth, changes sovereign ratings, changes debt dynamics, but it's the income from that sovereign, from nature intergenerational fund that is under lock and key and dedicated to the assets and to the people. Okay, so I just wanted to show you, this is a project that we are doing right now with the Maori. It's a project called Hinemoana Halo. When you work with indigenous people, it's different than working with governments because indigenous people, first of all, they plan for the next 100 years, 7 generations, 6, 7 generations. So there's no time consistency problem, okay? And in their case, they are the ones in charge, so they're the ones who do all the negotiations. We are technical advisors, we just provide advice, but we are not in the room. So when anybody, in the case, this is the Maori project, they have green, they have old growth, they're selling the carbon of the old growth, and they're also doing, seagrass, kelp, and so forth. And so what we worked it out with them is that what they're doing is they're not only selling carbon, they're selling biodiversity and social heritage credits. So it's all bundled under natural capital credits. Okay, and the nice thing about it, when it's indigenously owned, run, and managed and delivered to them, is you avoid many of the issues that would afflict if it were not owned by the indigenous people. Okay. So in terms of transparency, everything that is done is put on a platform. It's on the governance side, it's Maori led. And when you talk to indigenous people, as I'm sure you guys have, you realize very quickly that they don't separate between themselves and nature. They and nature are one. And therefore, when you talk about equity towards future generations, they already think 7 generations ahead, but they also know that they are part of nature. So they look after nature. That's endogenously. Okay, and we are using market techniques, we're using transparency, we're using all kinds of market mechanisms to be able to make the credit, the Maori credit, a AAA credit. Finally, I want to show you something, which is how you build this thing. Okay, if country is interested in building their blue natural capital, where do you start? The first thing you got to start is with the legal side. Do you own the asset? You have to show that you own the asset. Second thing is, what kind of assets are you talking about? What is it that you have in your country? Is it mangroves? Is it seagrass? Is it kelp? Is it forest, or is it aquatic? So we call it scientific accounting. Okay. Once you do that, you need to make commitments to the conservation and restoration project. And then what we do, we bring assurances. So in the projects that we do, we partner with PwC or KPMG. Some people partner with Ernst Young and others, auditing firms that can come in. These are market players that come in independently and verify that the transactions are honest transactions, or whatever you're saying is actually you're doing. Everything that you do, everything that is done from the moment you declare, this is the provenance, everything sits on a blockchain. And this blockchain is like a data utility that is emitting information to the markets on a continuous basis. Okay, and it chronicles everything that you are doing. It's not a trading platform. It's simply a data platform. Okay, and then once we have the science, we at Blue Green Future, we can actually do ex ante projection of how the asset will grow over time and what is the rate of sequestration of carbon over time, which allows us to calculate the expected flow of carbon sequestration over time. And then, of course, from there, you can do the valuation. Once you have all of these pieces, now you can take it to the market. You through a brokers, you can go through a regulated exchange. You run, or in the case of the Maori, our advice has been is not to put it on the Vera registry, but to create their own registry. Call it the Maori credits. Okay. I wanted to end, since this is ADB, is from a global point of view, there's something missing. When we talk about when we talk about nature, we talk about climate, these are global public goods. And therefore, telling markets, well, you need to figure out what to do, is really not the right thing to do. I mean, from a purely theoretical, conceptual point of view, this is from the theory of externality. We already know the first welfare theorem says when you have a public good, you can't leave it to the markets. The markets can do so much. Basically, what I'm trying to say is the invisible hand can do so much in terms of TNFD, ICDCM rules, but it really needs the visible hand. There's room here for the ADB, IMF, World Bank, all to come together and say, these are the rules of the game. We cannot leave it. We should not be leaving it to the markets. What are the implications for the global south? Okay, I get this question all the time. Remember what's really happening here. The global south is sitting on the supply of nature. The global north is the one that has the money and the time to worry about what's happening to climate and to nature. So presumably they're going to be paying for the ecosystem services that would be provided by the global south. So if this market were to take hold, and the projections are huge, you're going to have balance sheet effects. You're going to have that sustainability implications. For the global south, nature is an acyclical form of nature revenue, are acyclical by nature. It's going to have a tremendous orthogonal impact on business cycle revenue or anything that is cyclical, because nature itself is a long-lived asset, and therefore it is acyclical. So it's a great hedge against future pandemics or business cycle impacts. So a lot of good stuff that can come from this trade of ecosystem services between the global north and the global south. This is something I've been working on, which is, I've been asked, but SIDS are small and they're too small to be able to even figure out what to do, how do they go to the market, how they attract investment. So my advice to people, some countries that have come to me, and I said, why don't you guys get together and form yourself a Blue Natural Capital Bank? Why not? So you have Barbados, and you have Cayman, and you have Bahamas, and you have whatever, and you're too small. But together, if you come together, you can form some kind of it's almost, I want to say cartel, but like a coalition, and you can form a bank, and what the bank will do will advocate on your behalf, will harmonize the definitions, will actually ask for one price, and so you're pooling the resources, you're co-insuring each other, and therefore you're harnessing the market power. Finally, it's the last slide, is the nice thing about this: when we create this new paradigm where nature becomes core, the center of our economic activity, everybody is a winner, no one is a loser. If you're the government on the supply side, if you're in the global south, you're getting revenue. That revenue is acyclical, whether they're business cycles, whether, God forbid, another COVID, makes no difference, because we are fighting climate change and we need nature. So the demand for nature services will continue to be there. So that income is acyclical, and it's a great hedge, and it diversifies the economy, it improves the fiscal stance, and. If you're Microsoft and you're buying the carbon credits of let's say the Bahamas, what is it that you are benefiting from? First of all, you're reducing your carbon footprint. More importantly, when you invest in the in the reforestation of seagrass in the Bahamas, you're creating resilience in nature. And when you create resilience in nature, you are creating resilience in the people. You're stabilizing people on their land. You're reducing flooding. You're enhancing fish stocks. There are all these additional benefits. So you're fulfilling SDGs, at least 1, 3, 8, 5, 10, 13, 14, 15. I think I'm missing a few others. So the benefit to Microsoft and companies that want to, look good is reputationally going to be better off vis-a-vis their consumers, their investors, their regulators. Of course, who is the biggest beneficiary of it all? Well, of course, nature, because you are investing in the protection and restoration of nature. So nature is the winner, which means the environment is the winner, which means we are reducing climate change. And of course, the indigenous people and local communities are the great winners here, because they're getting a sustainable income, we're alleviating poverty, we're stabilizing them in their land, and we're creating meaningful employment. Thank you. I'll stop here.
Thank you very much. Great job, Ralph. Thank you very much. That was very comprehensive, and I think for many of us, these are all very new ideas. Well, especially me, I'm learning still a lot, and there's a lot to learn. Before I ask my questions, I can open the floor for questions from perhaps people online, please. If you have questions for Ralph. We have 24 people online on the call. Please feel free to raise your hand and ask the question. Or okay, Steve will start.
Hi, Ralph. How you going, mate?
Yes.
Good to see you. Hi.
Good to see you too. Hey, could you just go back to your slide about accounting? I just wanted to make a comment. By the way, it was a fantastic presentation. I loved it.
Thank you. Let's see if I can do it. Hold on. I was having.
Maybe so you can, so you can see everyone. Just don't do the presentation mode. I think it should be.
Yeah.
We can see the slides. Yeah.
Yeah. Let's see. For some reason, it's not appearing anymore for me.
Okay, so just on that slide, you talked about science-based targets and legal and the sort of the validation side. But yes. I think the important thing is to define what the asset is. I know you made that point in the slides before, but I just add in, the base asset, the base natural capital asset, because that one slide will then, people who look at the market will go, oh, okay, so that's how it works. But it's exactly. Yeah, you should turn that into you should turn this into this presentation into a movie, Ralph.
So I was trying to figure out, the audience, how sophisticated, usually if I have investors, it's slated a bit differently. So but you're absolutely right. The most important is the accounting side. If you get that. So the first thing is you're going to ask, because I've been brought into a number of countries or communities, and they say, well, we want to benefit. And I say, well, what is it that you have? What is it that you have? And the question is, and how much of it do you have? So are we talking about old growth? And even within old growth, what kind of trees? Because not all trees sequester the same. So with the Maori, for example, we know exactly what species of trees that they are going to plant. Okay. So when you're talking about, I was in the Caymans, and the Caymans, they have inland mangroves, and they have, upland and by the sea mangroves. They have different sequestration rates. So what is the species, even when you say mangroves, it really depends where you are, what kind of, when you say seagrass, what kind of seagrass are we talking about, right? Mediterranean seagrass is different than the Bahamas seagrass. So in many of these presentations, or when I interact with people, and they say, oh yeah, I said, no. You need to know the asset. I call it the asset very well, because if you don't know, what you have and what species it is and how it's behaving, you cannot project. You cannot project how is it going to grow or the rate of its sequestration. So the accounting side, the scientific accounting is very important. That's the first thing we do with communities and countries. Bahamas, that's what they did. So they have 93,000 square kilometers. And they would have never found that out, by the way, had they not used the tiger sharks.
Oh, that's amazing.
It's incredible. Those guys, I was on the boat where they were bringing the tiger sharks. And, you know, when you bring tiger sharks yeah, I know. It's incredibly dangerous. So the only way is when they flip them on one side, it triggers there's a nerve which basically causes the tiger shark to go, you know, quiet. And they quickly fit that 365 camera on the tiger shark, put it back in the water, and you know it disappears and does 80 miles a day. And then after 2 days, there's a release valve, automatic, and the cameras pop up to the surface, and they come and they collect it. And if you watch the presentation by Beneath the Waves, it's fascinating because they show you how the tiger shark is moving. And it comes to an area where they had no idea there was seagrass there. And then you see this huge meadow of seagrass that the tiger shark faces. By the way, the tiger sharks were never compensated for their work.
Slavery in the current form.
Yes, yes.
Just one final follow-up.
Yeah.
So we have a natural capital lab, and I actually invited some of the guys, Nare and I've shared his contact with you, your contact with him, and we'll get him as sharing the video. But could you just talk a little bit more about what you're seeing with international accounting standards and where we can get on the international accounting standards to align those standards with bringing in natural capital? Are we there yet? Because Ingrid Van Ees, who was our previous Vice President for Finance and Risk, Ingrid was working on that and pushing that before she left.
So, as you know, the World Bank has been leading in that area, trying on the accounting side. But are we there? No, we're not there. We're not there. Unfortunately. So there are efforts, but these efforts, what I'm trying to say is the following. If we believe that we cannot do without nature, and I don't think we need to make that case. Some people actually may want to. We cannot leave it to the markets. We cannot leave it to individual efforts. We cannot do it regionally. We should not be doing it. You know, by the way, for example, Japan does its own thing, right? It has its own definition. They have done their own definitions. They have their own system of so forth. But if we don't do it together, we're going to find out that we may not converge in the fight against climate change. So the international accounting standard is very important for also another reason. Suppose we don't have that system. Every country has its own system, and I'm a company, and I'm trying to arbitrage the regulation, right? I'm a recruiter. Where would I set up? I will set up in a country that has the least stringent accounting standard. I will set up there because the costs are lower and pollute for the rest of the world. So we would have achieved nothing. So we need a harmonization. There's a call to action, just like we did when when I arrived at the IMF, they told me you have to become an expert on Basel, the banking. And I did. I wrote many papers on it. The first thing you learn is, hey, when they decided that the banks shouldn't be left to their own devices, they all met in Basel in 1987. And they defined the rules of the game. They said, what is bank capital? We're going to tell you what bank capital is. Tier 1, Tier 2, Tier 3. They didn't leave it to the banks. And then they said to the banks, and you're going to have a minimum amount of 8% and 4% of this. So the world, the governments, the bodies decided that we cannot leave it to the markets. So we need to, and natural capital is far more important than bank capital, to my mind. So the international standards, accounting standards, are very important, that they be applied harmoniously, standardized across all countries, because we do not have time to arbitrage, to allow companies to arbitrage the regulations.
Thanks.
Thanks, Steve. Very good questions. I think Len raised his hand earlier. Len, do you have a question?
Thank you, Cindy. Ralph, amazing presentation. I could only attend the latter part of it, but I was just coming in from, we're seeing a lot of private companies, private equity funds, making a lot of noise about nature capital and wanting to put the money in, right? But what's been your experience, either in the Pacific or in, say, the Caribbean? Are you seeing that money actually getting deployed? What's holding it back? And what's the real role that, a development bank could play? I mean, we've done this before, in the case of renewables, right? Where everyone
Exactly.
wanted to do renewable energy, but it took an ADB or a World Bank to actually start some of these investments in. And I'm just curious if there are learnings or, how do you see that kind of happening here? Because everyone says we have money for nature capital, but we're not seeing stuff happening.
Yeah. So, but you put your finger on it. I mean, we need entities like the ADB, like the World Bank, to spearhead these efforts. The reason is the asset managers and equity, and I talk to them quite a bit. They start telling me, well, but nature, what is the risk? I said, look, all of you guys, when I was in the market, all of you guys were in CDO and CDO squared. Has anyone, by the way, and I looked at the audience, I was in London not too long ago, and I asked the audience of investment bankers, I said, how many of you have ever met a stock or a bond? Have you ever met one? Have you ever touched one? Have you ever smelled a stock or a bond? No. Or a CDO or CDO squared. You invested in it because somebody told you it's the thing to invest in. So now I come and tell you, invest in seagrass. You start telling me, but seagrass, it's something you can touch, you can feel, you can smell. You're telling me it's not real. So what's not real is real, and what's real is unreal. I mean, this is the strange world we live in. So they'll start. And I mean, look at crypto. I'm in cryptocurrency. Look at cryptocurrency. $1 trillion in it. What do you know about it? Where's the data? There's no data. It's what's happening is there's a party out there and nobody wants to be left out. So they all want to be part of it. So they all invest in it. When you come to nature and you say, they'll tell me like, oh, but the ocean. I said, look, yeah, you may not be an ocean dweller. You may be living, but the ocean science is more exact than many of these companies that you're investing in. So what it is, so their stated reason for not coming in, they tell you data quality. So in order to solve that issue, the way we do it, we're doing it in the Bahamas, we're doing it with the Maori. We are working, by the way, now we have a project with the indigenous Native Americans in the rewilding that's happening in the plains. Okay, the number of projects, we basically say, okay, whatever we do is going to be transparent, 100% transparent. Okay, and so every step we take, you can push a button and watch what we're doing. From the day we declare the project open, from the day we start, who owns what, where is that tract of land, how big is it, where are the trees, we're going to give you the satellite imagery. All of this enters on a utility platform. And the moment we put it on that utility platform, it's visible to the markets. So the demand side of the equation is saying, I need to be sure of the data quality, not the quantity, the quality. Okay, that's one. Two, they're going to ask you ownership. I mean, I remember being invited to work on the Amazon with indigenous people. The issue there was the issue was, can you show provenance? Can you show ownership? And there it was not very clear. For example, with the Maori, they have a very clear relationship with the crown. Okay, in many cases, they have the title to the land, the deed. So there are no ifs or buts, because the demand side of the equation doesn't want to figure it out for you. Do you have ownership or don't you have ownership? They need to know who they're dealing with. Okay. The other thing is commitment over time. And look, I was working in Gabon with Lee White for 3 years, trying to develop biodiversity credits for the elephants, because Gabon has done a tremendous effort in protecting their forest elephants and their forests in general. So we worked on the design of the biodiversity credits. Lee White was the minister at the time. Okay, and what happened? There was a coup d'etat. All that work disappeared, right? The new government, the new minister said, go out, kill all the elephants, cut down the trees. Now, who's going to invest? So what happens is the governance aspect is very important. And this is where ADB, IFC, World Bank can really play a catalytic role in providing the assurances, right? Taking away that type of risk, de-risking the investment that way, and saying, okay, we are going to guarantee some aspects of this. So the governance aspect of the nature market is really what's stymieing it. Let me tell you something. I don't want to name the company, but you can figure out. So when Kenya wanted to sell carbon, they got $3, $4 per ton. But I know the same company bought carbon from a carbon capture machine for $2,000.
Yeah.
Carbon capture machine, for Pete's sake. A carbon capture machine has no history. Carbon capture machine captures carbon, but cannot guarantee you that that carbon will be sequestered like nature does forever in the ground. Yet that company was willing to pay $2,000 for a carbon capture machine. Why? Because that machine is domiciled in the United States. They were figuring out on the governance side, well, I have access to the same court system in the US if something goes wrong. But if I have a disagreement with the government in Africa or somewhere else, what are my rights? You see, what are my guarantees? So behind all of this is a governance issue. And when ADB, given its position, and World Bank, IFC, can come in and provide that governance assurance, you'll see those markets move much faster.
It's a new product.
Thank you, Ralph.
Yeah.
Thank you.
Thank you. Thank you. Any more questions, please, from the online guest participants? I know there was a lot of material, and I'm sure you also have a lot of questions. Please don't be shy.
They can always write to me if they're shy, or
Yes.
maybe I lulled them to sleep. Who knows?
So maybe I can also bring up a question, Ralph. I know
Please.
that you are part of the TA team, and that we have work cut out for us already in this space. But what would you think? You talked about some of the key elements to this, accounting and of course accuracy of the data. You talked about commitment and then governance. How do you think the roadmap should look like for, say, an ADB to assist our countries, particularly, our small island developing states, in getting to that stage? Sorry. Yeah, not SIDS, but large oceans, as Steve was saying, large ocean states, where, how do we get from the current, I guess, pretty much lack of knowledge to where they can actually now actively be in the market for biodiversity credits, and not just carbon, even carbon credits. It's still very, it's not very active in these islands. So how do we get from here to there? How do we get a market to be, thriving in our communities?
So, I was in Indonesia not too long ago, and at the subnational level, these provinces have quite a bit of autonomy, and they're sitting on mangroves. I mean, Indonesia is huge. You have the Philippines, you have Malaysia, you have a lot of countries, and some of the large ocean economy countries. I mean, they may be small in terms of small islands in terms of mass, but they have large oceans. The first question is what Steve was asking, which is, what do you have? If you were in a start, that what is it that you have, right? Do you have mangroves? You have seagrass, you have salt marsh, you have kelp. What is it that you have? Many of them don't even know. And if they know, they don't know how much of it. So that's the first, what is it that you have? Okay, and that I
But
call
that's where accounting is. Right?
scientific accounting. It's you're doing an accounting. Okay, what is it that you have? What is your natural capital? Could be in land. You can have, blue or green, and the extent of it. So when we did with the Maori, the first question we asked them was, how much what is it that you have? They said, we have all. Well, let's go have a look. So I've been there twice now. Let's go have a look, and we can do all kinds. So that's the first part. With it, simultaneously, do you have ownership? Who has the ownership? That is incredibly important. Who owns it? The reason is, think of the demand side of the equation, right? The demand for the services may not be in the country, it may be, overseas. And those guys do not want trouble. They want to know, I need to know whom I'm dealing with on the other side. Okay. The other thing is, what are the assurances on the governance side that what the country can provide? So for example, okay, we're planting mangroves. Okay, how do I verify that you're planting mangroves? You're telling me you're planting mangrove, but how do I know that? So are you using a third party? Are you using satellites? Are you using, I mean, we have that technology now. And how do I know, I need to know without having to ask too many questions what you're really up to. So there are solutions to all of these issues, but these are governance type issues. And then can you keep your promises forward? Because remember, you're creating financial market. This is not philanthropy, right? So if I am buying from, if you're asking me to invest in your project, you're making promises to me into the future. Are you going to keep those promises? What assures me that you're going to keep those promises? And all of these issues have solutions to them. So there's quite a bit of capacity development here in this space on for the island economies, for the large economies, in terms of understanding what is it that they have, how valuable is it what they have, the optionality of what they have. We call it optionality. Okay, all of these things are incredibly, by the way, the demand side is equally, how shall I say, not well versed in this area. I get questions now from sustainability officers at companies saying, look, EU nature restoration law came down. We don't understand how to comply with it. We don't know what we're supposed to know because this is a new asset class. Nature is a new asset class. When I say nature, I'm talking about the living nature. That nature has always been an asset, right? If I tell you what's the value of a tree, if it's not a fruit tree, you'll think I'm talking about timber. I'm not. I'm talking about a tree that's sitting outside your office. That's not a fruit tree, but that tree is sequestering carbon. It's the regulating side of nature that's a new asset class. And that's really a whole new area. So recognizing that, so what countries are going to be interested in, like, for example, when I was brought into the Bahamas, they told them you have seagrass, and the government was like, okay, so we have seagrass. So what? Well, if you were to plant seagrass, you can do, by the way, additionality is two ways. You can do it either through restoration, or if you can prove that if I don't do something, I'm going to lose those mangroves to, to alternative farming, or maybe even, shrimp farming or whatever it is, or mining. So that's called avoidance of loss. These are the two rules of unfortunately, these are the two rules of the game under which you can sell carbon credits. Either you're restoring or you're protecting what's still standing from being completely devastated. So now you have to take action and you have to prove that you're really doing what you're supposed to be doing. So the management of the project, we call it the MRV, is very important. So there's quite a bit to unpack in each and every, just the accounting itself, that Steve was that's a whole area in and of itself. That's That's a hefty portion in and of itself. Then you have the legal side. Then you have the valuation side. Then you have the MRV side. Then you have the, the platform side. I mean, you can have a whole project, a whole series of workshops, a whole, if you like, program around educating the countries what are the steps that they need in order to go to the markets. As I explained to the Bahamas, it is not enough that when I said to the Prime Minister Davis, I said, the value is 170 billion. He said, one of the guys in the room said, oh, this is fantastic, we're rich. I said, potentially. Potentially, but you have to do quite a bit of work. You have to convince the markets, right? And it's a difference between getting $5 a ton or $70 a ton. And by the way, it's not carbon, as you guessed. I would not advise carbon. For the Maori, it's a Maori credit, and it comprises carbon, biodiversity, cultural, and social, all bundled together. The laws that are coming on the books now through the nature restoration law and the UK biodiversity law, and the SEC is coming out soon with its own recommendation, they're leapfrogging over the carbon. The carbon is one slice of the multiple ecosystem services that nature provides. So part of what we're doing then is we are educating, would be the constituency, about what is it that this is new information for many people, right? So I was, when I did the presentation for Belize, for example, it was, you could see that many people didn't know this. And what is it that we're sitting on? I mean, imagine seagrass, right? It's the ugly duckling. Carlos calls it the ugly duckling. No, you go to a resort, you find the resort people cutting the seagrass because the tourists don't want their feet to touch seagrass. Whereas that seagrass is actually gold. That seagrass is gold. And you may not even need the tourists. Right? Tourism is a fickle friend. Whereas carbon, everybody needs to fight climate change. The need for nature is not going away anytime soon.
Okay. Thank you very much, Ralph. I think we will need a second session because there's so much to cover. I know that we had some colleagues from the AFNR group, but I think they have since left. And we are out of time. We're over time already. But thank you very much, Ralph. Awesome presentation. A lot of knowledge there. And feel free, for anyone in the call, please feel free to, email us questions later. This is recorded, so you can also go back to it if you want to look at the slides. Ralph, are you able to share your slides so that we can disseminate? It will be good to look over them, and maybe more questions will come up, and then we'll let you know. But please, thank you so much. It has been very enlightening.
Thank you. Thank you, guys.
Thank you. And thank you to all for staying. We still have about 18 people on the call. So thank you so much for your interest. And we will let you know once the next in the series is coming.
Thank you. Have a great day.
Take care. Have a great day.
Thanks, Ralph.
Thank you, Ralph. Have a good night. Yeah. That was awesome.